Here at Superturn Africa in Cape Town, we have Clarisa de Franco, Managing Director, Head of Africa Funds, CDC Group. Welcome, Clarisa.
Thank you very much. It's lovely to be here.
What are some of the exciting areas that CDC is pushing into at the moment?
Probably the first one is venture capital. It's been a sector that has been up and coming, and we're starting to see now managers really, raising funds in the space, primarily in pockets, so North Africa, Tunisia, Egypt, Lagos, Nigeria more broadly, a bit of South Africa and Kenya. So definitely some hubs, which hopefully will then expand into the rest of the continent. We're trying to do a lot of work on mobilization. Obviously fundraising is a huge challenge right now. And we're looking at how to mobilize capital, not just from international investors, but local pools of capital that understand the challenges and the macro ups and downs of the various geographies, but also looking at different types of investors. So are there pools of capital that have not come to Africa that would want to have some sort of, see their money being put to good use, creating businesses on the ground, and have more a capital preservation approach versus a risk-adjusted return. And then finally, a bit on being able to tell the story of the investments a bit better and what their development impact is. So we've increased our team from a development impact perspective to really try to understand what are those companies that we're investing in through our funds actually achieving on the ground in terms of employment, in terms of types of jobs, in terms of women's economic empowerment.
You referenced some of the geographies, or should we say cities, that might be exciting, but what sectors and geographies generally are opening up?
So we invest across the whole continent, from North Africa to Southern Africa, Eastern and Western. Actually, we'd not been in North Africa for a few years and kind of restarted looking at North Africa over the last 2-3 years. It really depends on each opportunity, I would say. From a sector's perspective, we have, financial services have performed very well for us, infrastructure has done well, and food and agribusiness has done really well for us when we look at the portfolio across the whole. We obviously want to continue to direct capital towards education, towards healthcare, continuing to look at infrastructure in the broader sense, so looking also at energy efficiency, renewables. We've backed a couple of early stage developers in the renewable energy space more recently.
That sounds very interesting. And are there any areas that are overfunded or should be avoided in other ways?
So I definitely think it's the opposite. The fundraising traction is so slow right now. On an average, it's taking 24 months for a manager to get to a first close. Whether it's a first-time team or it's an existing manager, the challenge is very much there. We're spending a lot more time with GPs, just trying to understand who else is out there that can come in alongside us or alongside other DFIs to get them to that first close. In terms of certain segments, there really isn't one that we can identify, and it always depends on the opportunity that comes up, right? The team and the strategy and what are their networks and the broader questions that we look at when we look at any GP.
So does anything need to change in private equity's approach to Africa? What has worked, what hasn't worked?
So I think two things, namely, one, GPs are trying to focus on fundraising too quickly. So because of the pressures on GP economics, given the size of funds and how they built up the team, they're looking to the next fund as soon as they've finished investing. And we see a lot less emphasis on portfolio management. And we think that there needs to be, dedicated teams on just adding value to the portfolio. That doesn't mean that everybody needs to have an operating partner. It means that whatever your strategy is, the team, from the most senior people to the most junior people, really need to be in contact with those companies a lot more often. We've had examples of some people using interns to be, absorbed into companies day to day. We've had others that have that interaction at the mid-level. It really depends on each manager, but I think having that focus on enhanced portfolio management skills is really key. And that doesn't mean that you shouldn't think about fundraising, because it is important to make sure the economics work for a team. And it also pushes some pressure on the GP itself. And so when there's not enough capital, how are you going to incentivize your team? If you're not performing and you're not reaching carry, that tends to bubble up. And not enough GPs are thinking about that. So that's probably the second area that we'd like to see more thought on. The institutionalization of GPs more formally. Are they thinking about succession? Who's going to be the next layer of talent that's going to go up, come up to partner level, spread the partnership, and really ensure the longevity of that manager.
And how have you found 2018, and what's your outlook for 2019?
2018 has definitely been very tough from a fundraising perspective, from a returns perspective, from a macro perspective. And 2019 is probably going to be a lot tougher. We don't see that changing significantly over the next 12 months. We think that if you have dry powder, that's probably a good thing. You'll be able to see some more interesting valuations and hopefully more transactions being done. If you are a fund that's nearing the end of its life, we will continue to see extension requests. In our portfolio today, we've not had a single GP that's not asked for an extension to the end of the life, which has been interesting and puts into question, does that 10-year model actually work for us?
Clarisa, it's been a real pleasure having you with us at Super Return in Cape Town. Thank you.
Thank you very much. Thanks for having me.
Thank you.